Good morning, students. I am Jerry Wheeler, your economics teacher, and today we are going to learn about domestic income and national income.
So domestic income is the sum total of factor income generated within the domestic territory of a country. Now which income? This is the sum total of income that generated within the domestic territory. The word comes domestic territory. Now in our previous video I have already explained you about domestic territory. Maybe you forgot, so just once again I am revising. Maybe you remember this map, and as I told you, this all shows this is the map of India, and this boundary shows that whatever persons those who are earning within this one under this boundary, they are called the normal resident of the country. So whatever they will earn, that will be called domestic income. What it called? Domestic income. So what they are saying, domestic income is the sum total of factor income generated within the domestic territory of a country during the period of an accounting year. Accounting year means financial year. Okay, it includes factor incomes of both. Now the very interesting part, it includes the factor income of both, means the residents, it means normal residents, as well as non-residents in the domestic territory of a country. Now who are called normal resident non-residents of a country? This topic also I have put in our previous video. If you forgot, just once again I will tell you few points. Just see here, Indian working first normal resident of India. Those Indians who are working in foreign embassies in India. This is America. So if our Indian persons are working in this embassy of America, so they will be called the normal resident of India. Non-residents, foreigners working in Indian embassies in Canada and Japan. Suppose there is a embassy in Canada and Japan, and those Indians who are working there, they will be called the non-residents of India. Okay, so it means those who are working inside the domestic territory of India, they will be called normal resident. Okay, now what they are saying, so whoever, either they are resident and either they are normal resident, they are called, their income will be included in the domestic territory of a country. I hope it is clear too. So one more example I want to give you. Suppose that this America is there. Okay, so this embassy is there, na. So whatever they are working here, for that working they are getting money from their country. Okay, so whatever they are earning within the domestic territory of India. Though they are non-residents, but their income will be included in the domestic territory of India. Okay, so that is called domestic income. It will be called? Domestic income. So domestic income includes the income of residents as well as non-resident of the domestic territory of country. Okay, now domestic income includes, what it includes? It includes factor income. What is factor income? Which comes in return of the factor services. Okay, so factor income means rent, profit, interest. Okay, so earned by whom? By non-residents within the domestic territory of our country. Those residents who are not the residents of our country, but they are earning within the domestic territory of our country, so their income will be included in the domestic income. Like you can take examples of Malinga. Okay, Malinga is a non-resident. Why? Because Malinga is the cricketer of Sri Lanka. He is not Indian, but when he is coming to India, suppose that in IPL he came here and he worked in an advertisement, so he earn money. So that income will be included in the domestic territory of our country. So that is called domestic income only. So his income will be included in the domestic income. Okay, I hope it is clear to you. Now which income is not included? Domestic income does not include, what not include? That factor income which is earned by our residents from the domestic territory of other country. Now suppose that our Virat Kohli went to Sri Lanka and he played some series there, and he earned you can say that he act in advertisement, and he also earned money from the Sri Lanka. Now he earned money in the domestic territory of the Sri Lanka. That is not our country. So that income of Virat Kohli, though Virat Kohli is a resident of our country, but his income will not be included in the domestic income, though because it is earned in the domestic territory of other country. Okay, now comes national income. What is national income? How we can convert a domestic income to national income? How we can convert? Just see here, we exclude from a domestic income. Exclude means we have to subtract, or we have to separate what? which part we have to subtract? That part of factor income which belongs to non-residents. Now you have seen just you have seen that we have included the money which is earned by Malinga in our country, domestic territory of our country. That part we have included in the domestic income. If we remove that part from the domestic income, so what will happen? The domestic income will be converted into national income. And one more part, and something we have to add also. What we have to add? We add to domestic income that factor income which our residents earn from the rest of the world. Like suppose that we have taken our domestic income. Now from that domestic income we have subtracted the money which is earned by Malinga, and we have add that amount which is earned by Virat Kohli from Sri Lanka. So what will happen? The domestic income will convert into national income. So more easily you can understand by this formula that national income equal to what? Domestic income, which you have seen already upside, plus NFIA. Now questions come, what is this NFIA? NFIA means net factor income from abroad. Net factor income which is earned from abroad. Abroad means foreign. Okay, or you can say rest of the world. Okay, by whom? By our residents. Then how this net factor income comes? How is this NFIA come? When we earn, what is the money which is earned by our residents from rest of the world? Like suppose that our residents, those who are Indian residents, they went to foreign country and they have earned money from there. Suppose that they have earned their you can say 20 lakh. How much they have earned? 20 lakh. Okay, how much they have earned? 20 lakh. And factor income earned by non-residents in our domestic territory. And some non-residents, some foreigners came in our country and they have earned money from our country. So we have paid to them. So our country will pay them now. So our domestic players, you can say our cricket players like Virat Kohli, MS Dhoni, they went outside and they have earned money there. How much rupees? 20 lakh. Then some foreign cricketers also come in our country like David Warner, or you can say that Malinga, they have came in our country and they have also earned money. They have earned how much rupees? 15 lakh. How much? 15 lakh. So what is NFIA? The balance from the money earned by our resident minus the money earned by the other residents, the resident of other country. Means 20 lakh which is earned by Dhoni and Virat minus 15 lakh which is earned by Malinga and David Warner. So what left? 5 lakh. That 5 lakh will be called NFIA, and that 5 lakh we will add in domestic income. So it will become national income. More clearly you will understand by this. Look at here. Net factor income from abroad. Net. How this net comes? When we subtract factor income paid to abroad from factor income received from abroad. Factor income received from abroad. I hope you understood. Whatever our residents earn from the other countries. Okay. So it refers to the difference between, what is NFIA? It refers to the difference between factor income received from rest of the world and factor income paid to the rest of the world. So NFIA can be, or now first this one you learn components in NFIA, how they can earn, how our residents can earn from the foreign country by net compensation to employees. Suppose that our you can say that our residents, our Indian residents went to foreign country and they have done their job there. Many people are going there and they have earned money in the form of salary. So that part will comes under net factor income earned from abroad. Second point, you can say net income from property. Like Akshay Kumar, they went to Canada and you can say that he buy a property there. Now on this property is there, it means, and he is getting some rent on that property. So that money will be called comes under net factor income from abroad. Entrepreneurship, our Indian persons went to Dubai, they have done their business there, and in that business they earn profit. So that part will also comes under net factor income from abroad. Then comes net retained earnings. Now that must work if our persons are going outside and they are working there, so they will save some part. So that is called retained earnings. So that will be also comes under net factor income from abroad. Now they are saying that net factor income can be positive, negative, zero. Now how it can be positive? Now don't understand that positive means here corona positive. We are not talking about corona positive, okay? So positive means when the NFIA, net factor income from abroad, becomes positive. It becomes positive when the money which is earned by our residents from foreign country is more than the money which is paid by our country to the foreigners. Like one example I have given you, given you that Virat Kohli and MS Dhoni have earned 20 lakh from abroad. So it means we received. And then David Warner and Malinga earned 15 lakh. Okay. So what is more? That received amount which is earned by our cricketers. So that is more na. So that means our NFIA is positive. Now when it becomes negative, so when our received amount is less than the paid amount, and when it becomes zero, when both are equal. I hope it is clear to you. Now it is the time to see the formula: domestic income, national income. If you are having domestic income, suppose that if you are having domestic income, so how you will convert into national income? By adding NFIA. You are having domestic income, you will add into what? NFIA, net factor income from abroad. So what you will get? National income. And suppose reverse, if you are having national income and you want to get domestic income, so subtract NFIA. So you will get domestic income. So formula number 3, national income equals to domestic income plus NFIA. Or you can say domestic income equals to, so NFIA will go that side. It means national income minus NFIA. So I hope it is clear to you. Thank you, class.
So at last, I want to say be safe and God bless you all.